All right, welcome to another expert interview. I start them all the same way. I'm always excited for the people I get to talk to and interview. Today is no exception, and we get to talk about a topic that I know people are interested to talk about. And part of it is one of the three things no one wants to talk about. So I think when we bring in crypto and taxes, we're going to have a really interesting and fun conversation. I always let my guests introduce themselves. So Trent, tell us about yourself, man. Who are you? What do you do? And then we'll dive in.
Yeah, my name's Trent Nydegger. I work with Moontax. We are a crypto data labeling reconciliation firm. So we help people do blockchain forensics to ensure that their data is clean. We always say you don't have a tax problem, you have a data problem. With clean data, taxes are fairly easy and straightforward to calculate. But if the data is messy, then your numbers are going to be all over the place, and you're going to be wondering, how do I actually owe that amount of money when I never actually made that amount of money? So yeah, that's what we do. And we've got a really cool tech side of the piece. But today we're just going to talk strictly about the taxes and the blockchain forensics and how we can help support people who are in the space.
Love it, man. Let's go backwards a little bit because the fact that you're sitting here and everything that just came out of your mouth, like how the heck did you get to this moment to what you're doing now?
Yeah, so I've always been like a curious person by nature. I'm kind of a jack of all trades. If there's an industry out there, I've probably worked in it. Um, and then at one point I got really crypto curious, as most people did. And, this is probably back in 2017, 2018. Tried to get in, wasn't doing my own research as I should have, lost a bunch of money, but still really like the technology. I mean, I've always been kind of fascinated with the blockchain. And so when I found Moontax, I was actually running my previous company, and it was such a fascinating thing that I never thought I'd be fascinated about, that I ended up just leaving my other company and just diving head into this. And so really in this space, a lot of it is, there's not like they have degrees for this kind of stuff. And I never thought I'd be doing taxes. That was the last thing I ever thought I'd find myself doing. But turns out I kind of have a passion for helping people not go to prison and helping them also pay the government as least money as possible legally. And so, yeah, so I've been here ever since and just pushing forward. And it's been a really fun, interesting ride to kind of go through. Especially in this space because the regulation is so vague and it's so gray that's really where I've really found like a true passion. That's just something that I've never found anywhere else in everything that I've done. So
So let's talk about we've had some amazing conversations. I know when you're actually in town, we kind of geeked out on some of this, but let's ground this so that people really understand the problem. So give
yeah,
me a story of someone who has invested, they bought, sold, they've got kind of a complex situation. Where are the problems? Is it how much they've made? Is it what they actually owe? Is it they've got stuff distributed everywhere? Like, kind of walk us through what the actual problem is, and then we can dig into some solutions.
yeah, absolutely. So as people start trading and doing into crypto, first they're like the first problem is depending on your age mainly and just kind of where you sit on that kind of a spectrum, a lot of people don't even think that they have to pay taxes on crypto. And I'm sorry, the unfortunate truth is the government wants their revenue. So that's kind of the first thing is most people who are just doing like little bits of trading, they don't really think about it. But now because of some of the more mainstream media, people are like, man, I have never filed on my crypto taxes in the last 3, 4 years. And I've made a lot of money and I don't want the IRS coming after me. And so then what they do is, there's different what we call CATs, which are crypto accounting tax softwares that exist. There's several of those. And you can go and upload your wallets, upload your exchanges to 3, 4 different ones. Literally don't do anything. Just upload your wallets and exchanges, and your tax liability will be different in every single one. And I'm not talking just like a little bit off. I'm talking by tens of thousands, if not hundreds of thousands of dollars off. I'm not even joking. And so it is a massive problem. That's why I said it's like, wait, I know I made more money than that, or it's there's no way I made that much money. I don't even have that much. How am I supposed to pay the tax bill on this? Do you know what I mean? So that's kind of like the main problem. And that's kind of where we come down to say, like, all of these different platforms, they're rules-based systems. And so how they fetch, transform, enhance, and then categorize the data to then calculate your taxes, it's different in every single one. I mean, these guys were kind of early on, and that's kind of the problem, is what they're struggling with is keeping up with the pace of innovation of crypto. There's so many new things that come out. I mean, now, that one of the new things this year is pulse chain and printer tokens. And it's kind of a new way of earning, yield on your digital assets that's never been done before. And so like support for it in these platforms is very limited right now with the time. And so that's kind of what, one of the big problems that people are running up against is like they like being in all the new shiny things in crypto and cryptocurrency and blockchain and stuff, and it's cool. But then, where do you find the support to be able to make sure that you're paying an appropriate amount of tax?
Man,
So that's
I love
yeah.
I love that you talked about like even if you're conscious enough or you see the news article and you're like, oh dang, like I may actually have a tax problem here, and then they go to solve it. Well, depending on which platform they choose to solve it, it sounds like none of them are probably actually accurate because it doesn't look at the complexity in full picture. And so let's go a step further. Let's say someone went through that process and maybe they're in that moment of like, yeah, I have uploaded it. And then I'm sitting there scratching my head wondering, do I owe this? Why do I owe that? What's the thing? Kind of talk me through what you're looking at when you come in to work with one of those clients and what are you uncovering?
Yeah, so one of the things, like when we first find them, like again, it's getting them to understand, like, first of all, everything's going to be okay. I promise. Kind of like I said, it's a data problem, not necessarily a tax problem. But one of the issues, again, one of the problems is all these platforms. There's no standard lexicon of terminology that is used as far as what constitutes a taxable event and what doesn't. What's the difference between a send, a withdrawal, or a deposit and a receive, and what constitutes a taxable event within that platform? Because they're all using different terms. I mean, there's trade, exchange, swap. Those all constitute basically you trading one asset for another. But depending on what platform you're using, it's going to either cause a taxable event or not. And figuring that out is not necessarily straightforward in these platforms. They're not super user friendly, and they're that's kind of one of the things that we kind of talk through our client is we have certain platforms that we prefer, mainly because what we're looking for is how easy is it for me to correct something that needs to be fixed within that platform? And what kind of information is the platform actually offering me, instead of just saying, here's a trade, here's your tax liability? Like, are they giving me a ledger, and a breakdown of like tax lots of like, is this a long or a short term capital gain? Do you know what I mean? Like, is this an income event because it was a reward or an airdrop or something like that? And so being able to kind of talk people through that, it kind of helps them understand like, oh, okay, this is a problem, and this is a problem that I don't know how to solve, because each one of these platforms is kind of like playing a new financial video game. You've got to find like where the secret door is to find the golden sword to be able to like solve the, win the game, so to speak. So, I mean, that's really kind of how we talk people through that. And, what we do is we basically get access to these platforms, which are read only, by the way. A lot of people, they do get nervous because it's like, well, I want to expose myself and give away, these are read only platforms. They are, they're safe. Like you're not, don't ever give away your keys, any of that kind of stuff. And by inviting us to it, it just allows us to read that transactional data and make changes on your behalf.
Well, so let's talk through a real case study. Can you give me a client that had a big taxable problem and kind of walk me through what you were able to uncover, discover, kind of what the end result was?
Yeah. So actually, this tax year, it was he came to us right before tax day. Unfortunately, most people push off taxes because they don't want to think about it. So they come in very last minute, whereas like you can start now to do your taxes. But he came in like mid-March, and tax day is April 15th. Um, by going through his data, um, it turns out, because that's the thing, that's another problem. If people have been paying their taxes, it's likely that they have overpaid, either because their CPA didn't know what they were doing, or they didn't know what they were doing, and they were just like, you know what, I just want to pay something. I don't like whatever. But in this gentleman's case, in 2021, he had paid on $1.6 million worth of liability at a $0 cost basis, which is not true. Do you know what I mean? Like, I know that he didn't get $1.6 million worth of digital assets for free. So in like going through historically in his data, I mean, that's kind of the thing too that we always tell people is like, you, you can't just do the current year, because cost basis does get lost because of the nature of centralized exchanges, which are their own siloed not on-chain platforms like Coinbase, Kraken, those centralized exchanges. If you go on chain from those centralized exchanges and you do a bunch of stuff on blockchain, whether that's Ethereum, Solana, Pulse Chain, whatever, and then you go either back to that centralized exchange or you go to a different one, like you go from Coinbase to Chain to then Kraken. Kraken and Coinbase don't talk to each other. And so Kraken doesn't know your original cost basis that you bought on Coinbase. And so that kind of gets lost along the coin flow. And so we have to go back to the genesis of time. Essentially, where did you start in crypto? Where did you start? What did you do in the middle? And where are you at today? That whole, what we call coin flow, that is your audit trail. That story needs to make sure that cost basis is being carried forward, that whatever you did, whether that's liquidity pools, staking protocols, things like that, that it's not losing cost basis, because that happens. You know what I mean? Like, you'll go into liquidity pool and then you'll come out and all of a sudden they say, well, whatever you pulled out is a $0 cost basis for some reason. Like, I don't, it's like they just say you got it for free, and that's not true. Like, I know you didn't get $30,000 worth of a digital asset for free. You know what I mean? There's also the case of like missing wallets and things like that. A lot of people have multiple wallets. I mean, I literally have clients that have hundreds of wallets. And did you upload all of those wallets into the CAT system, the crypto accounting tax system? If not, we have to identify data gaps, because what is or should be a self-transfer is going to be categorized as like a send. And a send is a taxable event, but I know you didn't send 50 grand to just some random person. You're either going into a liquidity pool or a staking protocol, or it's just a self-transfer to a wallet that maybe you forgot about and you're just not using anymore. So these are kind of the details that we pieced together for this gentleman back, and it turns out, so there's a 3-year statute of limitation that you can go back and amend and claw back taxes of overpayment if you find discrepancies, right? So that always closes on April 15th, and so April 15th of this year was the closing date for 2021. And it was in 2021 that he paid $1.6 million on zero tax liability. So we went back and did all of his data, and it turns out his actual taxable liability was like $220,000. And so, yeah, that's a huge difference. So we were able to get all of his data cleaned up and then submit an amended tax return for 2021 before midnight on April 14th. And he got back a 6-figure refund for overpayment of taxes. Another quick example, we had a client that was in audit with the IRS currently. The IRS was saying that he owed $2 million in taxes. Guy had over 500,000 transactions. We ran it through our system that we're building. It was like in its infancy right then. It didn't even have a UX or UI. We're talking like terminal code style mode. But we ran it through there and we got an audit ready report for him, submitted to the IRS. And obviously there was back and forth with the agent from the IRS for 3-4 months or whatever. But at the end of the day, he accepted that first data set because there was no argument against it. So he went from owing to $2 million in taxes. We won the audit, and it turns out he owed less than $1,000 in taxes. So there's a lot of discrepancy out there, and it's a lot because the IRS, one of the things that I always tell people, everyone thinks the IRS is this big bad wolf that's come to like eat your children and your wife and take all of your belongings. And really, they're with the right people in your team, they're kind of like a puppy dog you can just kick to the curb. You know what I mean? Like, you can argue with the IRS, and a lot of things that people need to also understand is they don't create tax code. They are an enforcement agency, so they interpret tax code. So all of these revenue rules regarding digital assets are their opinion on how they think crypto should be taxed. And a lot of it is not congruent with current property tax code, because crypto is legally considered property. And so the way that they're trying to tax some of these, crypto to crypto activity, and that's another thing that people need to understand. It's not just what did you pull in and what did you pull out, and that difference is what you owe in tax. That's not true. There's crypto to crypto activity. Like when you go from Bitcoin to Ethereum or Ethereum to Solana, you're changing your property. You're like literally selling one asset and acquiring another. So those are capital gains events. Whenever you're doing mining and getting rewards, doing validating and getting rewards, you're doing printer tokens and getting rewards, you're doing staking protocols and getting rewards, even if it's liquid staking, they want to say that those are all taxable events. And that's not necessarily congruent with current property tax code and standing court precedents. So having that fundamental understanding is really important for people to really understand, so that you can have the confidence and know that you've there's people out there to help you, and that there is protections that you can put in place to really mitigate any penalties, fees, or interest that IRS might say that you owe.
Man, those are such powerful examples because one overpaid because they're like, look, I know I need to do something, but like you said, even just the aha moment of like your cost basis can't be zero like that, unless someone just gifted it all to you. That's weird. And so if
Yeah.
you're buying it, that's interesting. But then you explain the complexity, right? Because there's so many moving pieces here, and then yeah, understanding language and terminology. And so it goes all back to where you started, which is it's all in the data, right? Like how good and clean can we get the data so that we then can either make an argument and then support that argument, as we're justifying.
Yes, absolutely. And that's really, we don't this kind of like a weird moniker, but we actually like what we give people is peace of mind. I mean, I can't tell you how many clients I'm like, sigh of relief. Thank goodness I found you guys, because I didn't know what I was doing. My CPA has no idea. He told me to figure out and just give him some forms so he can push some paper. And that's just a bad way of going about the problem. You know what I mean? You're guaranteed to overpay taxes, and or you might be underreporting, and in which case that's a problem too. I mean, a lot of people don't understand that, like, and that's again kind of the education piece of people who think that they don't have to pay taxes. That is dangerous. And I say dangerous because if they can prove intent of fraud, meaning like you intentionally tried to avoid paying taxes, that's prison time. I mean, that's Al Capone status. I mean, Al Capone didn't go to, prison because he murdered people and, drug trafficked all over the place. He went to prison for tax evasion, So, I mean, it's really a more serious problem than people like to like really give credit. And so being educated and aware of what your solutions and what your possibilities are is really important.
Is there a tipping point on how much you're doing? Like, is it $600? Is it 50 grand? Like, is there a tipping point when you should lean in and look at it? Is there a dabbling point where it doesn't really matter? Is it everyone should look into it and track it?
I mean, honestly, from my perspective, everyone should be doing it. I mean, I have clients that have 150 transactions, and like I said, clients with 500,000 transactions. And so, like, for us, like we have kind of like a sliding scale pricing model from when it comes to us and what we do. If you're on the like the lower end of transactions, it's just going to be like a minimum like base fee retainer. We'll go through and clean up all of your data for that peace of mind. But we're also, there was a gentleman that came and, he was actually like a really big real estate investor, but his strategy was more buy and hold. Like he wasn't doing a lot of trading. He buys assets and he holds them. And that's pretty much all that he does. He had just under 1,000 transactions, and we always do free consultations with all of our clients. It's just like, yeah, book a meeting with me. I'll go into the data with you and talk you through what I'm seeing and like what's going on. But at the end of the day, I was like, hey man, your stuff is really straightforward. You don't really have any issues. Like you literally don't really need our services. And so you can just download your forms from the crypto accounting tax software, and you can just pass that off to your CPA and file this 8949 Schedule D and Schedule 1, and you're good to go. Like it's really not a tipping point for us. We're also trying to push the education. Like we truly believe in blockchain technology, and that cryptocurrency, people think it's a scam, but what we really see it as is the evolution of finance. you know um this is kind of like debit cards and credit cards in the late 80s. I mean, everyone thought like, who's going to use a little piece of plastic to pay for anything? You know what I mean? And kind of the same thing with the internet. When the internet came around, it's like, well, how? No, I'm not going to buy anything off a website. And then you had smartphones and apps, and it was like, I'm not going to download this, PayPal or Venmo or Cash App or whatever. Why would I use that? You know what I mean? But now we've seen as like technology evolves, and this is what really people need to understand. This is an evolution of technology and finance all in one situation. And believe it or not, you're still early. Like you're still very, very early on. Even, people are seeing, Bitcoin hitting, 120K, even close to 130K. You're still very, very early with a lot of this stuff. Um, and you do need to be careful. I mean, that's, kind of the thing, like the mainstays, like make sure that you're doing your own research. There's a lot of good resources out there too for people to learn. And a lot of the bad actors have, kind of gotten pushed out. I mean, there was a lot of, there were what they call rug pulls where, you do need to be careful with that kind of stuff. Like the meme coin stuff, unless you're very like deep into the culture and stuff, I'd say, kind of stay away from those, like the Trump coin, stuff like that. It's just like they're going to pump a lot really fast, and then they're going to fall a lot really fast. But then like you have your, mainstays, like your layer one blockchains like Bitcoin, Ethereum, Solana. Those are going to be way more stable. And then obviously, like with stable coins now, that's going to be a huge thing with the Genius Act and the Clarity Act that just came through this year from the current administration. Stable coins are very quickly going to be like the new form of payment. You know what I mean? As far as like how things are going to be transacting. And the nice thing is that, what people don't understand about blockchain, again, I kind of giggle when people say like, well, nobody knows who I am and blah, blah, blah. And it's like, I'm sorry, but you're forgetting the concept of an immutable public ledger. Like if you do anything on chain, I can find you. Like if I know one of your wallets, I can find all of your wallets. I promise. Now, even that, like even if I don't know who owns the wallet, I can find all associated wallets with it. And then that's the thing that with people don't understand too, is if you're using a centralized exchange, there's, coming up this next year, all of these, DEXs, which are decentralized exchanges, which are on chain, and then centralized exchanges like Coinbase and Kraken, which are not, but they're all now required to send what's called a form 1099-DA, DA standing for digital assets. And they're only reporting what happened on their platform. So the IRS is going to get these forms, and they're not going to have a whole picture of what actually happened. And so it's going to cause a lot of problems for a lot of people, because all of a sudden the IRS now knows, like most people go through a centralized exchange. That's the on-ramp of, from their bank, US dollars into like cryptocurrency. And then they go on chain. Guess what? Those siloed exchanges, centralized exchanges, Kraken, Coinbase, they can be subpoenaed for records and they can find out who you are. Like that is now a very, very real thing. So
Talk to me about the future. I know you're deep in this and you're studying and looking at it. So let's just cast the vision. Like where are we going with all of this stuff?
well, that's kind of again the interesting thing. Like the acts that just came out for the stable coins, that's really laying the foundation of, kind of like the payment rails, so to speak, of transacting on blockchain. Um, and now you're starting to see people start to be able to do things with their digital assets. Like you can collateralize your own loan, like your own digital asset, and take a loan out against it for liquid capital to be able to do things with it, whether that's buy a house or something else. People are going to start tokenizing what's called RWAs, or real world assets. Real estate's like kind of the first one into that, where they're lowering the barrier of entry to real estate investing by doing this and tokenizing, storage units and, you know, commercial units and warehousing and, even residential, like rentals and things like that, where you can go into that real world asset, buy 100, $500 worth of that token, and you get to participate in the upside of that asset, which is a real world backed by, you know, an actual, physical thing. Because that's like another thing with blockchain, is that like, well, how do I know it's real? I mean, is it like what, how does it even have value? You know what I mean? And one of the things that I talk to people is like, what gives it value is users. And the interesting thing about blockchain is that it is a global network. So it's not just like here in the United States. I mean, one of the guys that, that I just brought on as a client, him and his team, like one guy lives in South Africa, one guy lives in Singapore, and one guy lives in Sweden. And then there's one guy here in the United States. But their protocol that they're doing with these printer tokens is making tens of millions of dollars. I mean, just hand over fist money. I mean, it's crazy. And that's the thing where, it's kind of really breaking out of the centralized exchanges of like the central banks, so to speak. Banks, there's so many things that have to happen for you to, get a loan or get a mortgage or do these types of things. And so it's really breaking down those barriers and making it easy for people to transact on a more peer-to-peer level. And so when we start seeing this, I mean, think about smart contracts, your mortgage being a smart contract, where as soon as that deposit hits, like things just start happening in the smart contract. So there's going to be a lot of middlemen that aren't going to necessarily be needed, because those functionalities, will be just automatically coded within the smart contract. So, I think it's going to be a lot more affordable for people to be able to transact on different types of things that they want to do. And it's going to create a lot more transparency and accountability within all realms of, society. I mean, I, come from my dad's a patent lawyer. I have a patent myself. And it's like, I'm thinking to myself, licensing agreements for like patents and stuff like that. These types of contracts really depend on third party trust. You know what I mean? Like you have to trust that when that person goes and utilizes that license, that those royalties or whatever that is supposed to be coming back to you, there's a lot of trust there. And that's where a lot of, the courts get bogged down in like litigation and stuff because people aren't fulfilling on those contracts. Now, when those contracts are on the blockchain and they're smart contracts, you don't have to worry about it getting fulfilled because there's technological triggers that just happen. And you're not relying on like some person's just honesty and integrity. It just happens. And if whatever reason like the person doesn't do what it does, it cancels that contract and brings back and pulls back that money. You know what I mean? And so there's a lot more consensus and trust, um, transparency and accountability. You know what I mean? Like one of the things that I also think of, which I think they're kind of terrified of, is, I mean, think about politicians. If campaign finances were on blockchain, an immutable public ledger, I don't think that we would see nearly the amount of scandals that we are seeing currently with politicians misusing campaign funds or things like that. It would be very clear and straightforward. It would be very cut and dry. So, as far as the future is concerned, like I'm fairly certain that like my daughter who's just starting preschool is going to be using blockchain technology and cryptocurrency, much like we use smartphones and, Cash App and Venmo and stuff like that today. And it's not even going to be a thought, you know what I mean, of like, well, is it safe or is it not? It really, within the next 25 to 40 years, it's going to be so integrated into everything that we do that it's just going to be normal, like we use computers and smartphones today.
So you mentioned something interesting there that I want to kind of poke on a little bit for those I think who might be curious. How does it impact global financial, right? Because I know there's so much talking about like exchange trading for different currencies and all these other things, but this all kind of supersedes all of that. So what are you seeing come down for, moving money between countries or between people in different spaces? Like how is it impacting the global, finance world?
In a very massive way. And this is kind of where you see, I mean, a lot of people, either moving, I mean, this is where you're going to start seeing governments who are enacting legislation that is, blockchain and cryptocurrency friendly. You're going to see massive investment into those places. I mean, there's a network right now, for example, called the Canton Network. I mean, massive bank institutions. I'm talking like Chase Bank. I'm talking like JP Morgan, Bank of America. They are running nodes, validators on this blockchain. And so this global financial movement, they're trying to get on there to kind of stay relevant. But like, for example, if I wanted to transfer money to someone across the world and pick a country, if we met wherever, however it is that we met, whether that was at a conference, we met in a Telegram group or a Discord group or wherever, if I know their wallet address, I can just send them money for services. I mean, a lot of my clients, they are contractors. There are a lot of independent contractors, developers and things like that. And that's kind of the neat thing about AI right now is like we're seeing a lot of people who don't even know how to code, but they know how to utilize AI to write their code. And they are supporting these projects and getting paid very large sums of money from foreign entities. You know what I mean? And so you're going to start seeing a really major shift in how finance works. And it's not just going to be wire transfers, ACH, and that kind of stuff with traditional banks. You're going to see people start becoming their own bank. I mean, that's kind of like the whole point of decentralization is you can now take the upside, of the economics that banks participate in. I mean, banks make, double digit, sometimes triple digit percentages on money because of the way they operate. And by utilizing cryptocurrency, you can also participate in that same type of economic upside.
Love that. I love that you highlighted the way you did because I was reading an article yesterday on contractors and it was kind of a funny one because it was a contractor employer headbutt. But the reality is, I mean, people, the whole world is available to work with, employ with, partner with, do deals with, and it's never been easier. Like it's never been easier to do business everywhere.
Yeah.
And it's now getting easier to pay and receive between all of those countries without having to worry about exchange rates and all this other stuff, which if you've ever done business in some of these other countries, sometimes it's crazy. Like it's really
Yeah.
hard, even if you send them a PayPal invoice and then they're like, well, like, can you send it to me this way? Or can you send it to me that way so that I don't have to pay more? I know I had some Canada clients that were always like, no, man, I don't want to pay the exchange to pay you in US. And so
Yeah.
I could see all of that kind of going sideways where it's like, oh no, don't do that. Like, here's my wallet. And it's like they can buy in at whatever the rate is. And then now all of a sudden you're transacting inside of the wallets, right?
That's exactly right. I mean, so for example, I mean, I've done data reconciliation for clients in Australia, clients in Canada, some over in Southeast Asia, because the data is the data. So you know what I mean. We also help people file taxes, but that's specifically here in the United States. But for those kind of people, they just need their data correct. And so when I'm working with these people, it's like, yeah, we accept. How do you want to pay? Do you want to pay in ETH? Do you want to pay in Solana? Do you want to pay in USDC? Like, tell me what kind of cryptocurrency you want to pay in. I mean, obviously, like we're not going to get paid in a meme coin. We're not going to get paid in Trump coin or anything like that. But like, the more stable layer one coins, it's like, yeah, like absolutely, I will accept payment in that. And it's an easy transact. There's no, you know what I mean? There's, like you said, you're not having to go to the exchange, take the hit on the forex, do you know what I mean? As far as like changing that foreign currency into whatever, like that's not a thing anymore. It's now, like I said, the ability to transact globally for these types of things just became exponentially easier for everybody to do business in all kinds of different ways.
Well, man, we've covered a lot of ground. We've geeked out. What haven't we talked about? What are you hearing, seeing? What's trending? Kind of fill in anything you think we haven't talked about.
Yeah, definitely find a good data professional. Like there's a few firms out there that do it. There's not a lot, um, but just make sure that you have clean data. I mean, I would say the biggest takeaway for people is it's better to do and be proactive when it comes to your taxes than not. Because that you're just giving the IRS more teeth to come after you and do things. Um, Granted, that like while their ability is limited, they are getting better. They are getting smarter. You know what I mean? Every single year, I mean, they are starting to somewhat catch up, so to speak. One of the things that I would say as far as really just start educating yourself. I mean, that's one of the biggest things that I would tell people is pull your head out of the sand and really start learning. You know what I mean? Just get curious about things. I mean, with the age of the internet, it's all out there, and you know, just be cautious. I would say start slow. As you're getting into cryptocurrency, people are like, "Oh, like you're in crypto. Like, well, what should I do?" And I'm just buy Bitcoin. That's it. Start reading some articles. Find some good resources. There's plenty of them out there. With a very quick search, you can start finding things and start learning about how things are going. Um, and then just be aware of what you're doing. Like try and get educated on like, okay, if I do this, is this causing a taxable event or not? Um, but there is opportunity out there, and I think that that's kind of the biggest takeaway is don't miss out on this opportunity. I mean, this is kind of like investing in you know early Amazon or early stuff like back in like the 90s like type stock, and like now you look at it today. You know what I mean? Like that's that's the kind of thing that we're talking about, is that there is massive opportunity as long as you're willing to educate yourself. And it's never been easier to do that than today with the technology that we currently have in place.
Love that. Do you have any tips on a book you like, someone that you think is a great thought leader, a place to go? Obviously we can search and leverage AI to pull stuff for us, but are there any like safe spaces they should start to get some education?
Yeah, there's like the Ethereum Foundation, the Solana Foundation. Those are really, really good, safe places to go just to kind of start dabbling in crypto. I mean, each blockchain, as people may or may not know, is kind of built for a different purpose. Ethereum's more kind of like enterprise, like businesses, offering, products to like the end user and things like that. Um, Solana is more kind of like pet project entrepreneurship type thing. There's like a lot of meme coins and stuff like that that kind of go on Solana, which kind of give it a bad rap, but I'm actually at Mountain DAO right now, which is like a Solana funded a DAO, which that's something that we didn't even talk about. DAOs are decentralized autonomous organizations. So when you become a member of a DAO, you get voting rights. And it's the community and that consensus of the community that guides what the DAO is doing with the funds that it gets. And like they fund projects, you know what I mean? They've got protocols where you can earn yield. Um, those are really, really good places to just kind of start. Um, online, like with YouTube and stuff like that, there's kind of more nuanced stuff. One of the guys that I started with that I really like, he's been around for a long time, is called DAP University, DAPP University. Um, he's got a really great YouTube channel. Some of his stuff might be a little bit more advanced for some people, but he's got a ton of content, and you can just kind of start diving in there. Um, and then yeah, I mean, those are just some of the more like kind of nuanced places people might not think, but um, there's a ton of resources out there. I mean, there's a ton of educational groups, like investing type groups. Like I work with one of them. There's one called DeFi Cash Alliance. Those guys are great. They've got really good strategies for like trading and stuff like that. And then they also include like a trust play, again with the goal of not paying taxes. like so utilizing trusts and being able to do that, with like your capital so that again you're maximizing your wealth. There's another group called Awesomely that I work with. They teach more like liquidity pool enters and exits as a way to earn yield and kind of increase profits on your digital assets and the way that you're trading it. These types of groups, I mean, typically some of them are paid, but they're really, really good sources of information. And they do have a lot of really good free information as well. So looking for, those types of groups, um, again, just be cautious. You know what I mean? Like I said, do your own research. Like, don't just like find one and be like, go all in. Don't do that. Start small. You know what I mean? And then work your way into things. And as you get more comfortable and you get more familiar with the space, Telegram is a huge place. Go in and start trying to look for like Telegram groups. The Bitcoin Reddit feed is really, really good. I mean, there's a lot of stuff on there, but Reddit feeds are really, really great because they're verified real users who are giving information out. And so kind of diving deep into those, there's a lot of subreddits underneath those types of things where you can find a lot of really good information of just where to start, how to start. you know it's pretty simple. I mean, the centralized exchanges also as well, they have educational platforms, Kraken, Coinbase. While they are centralized, they're very easy to start with. Download an app, and then they've got a ton of educational content just in those platforms alone. um, that's where I would really recommend people kind of start off. Again, start slow, start small, and as you get more comfortable, then you can start diving deeper.
Oh man, talk to us about how people can get a hold of you. So if you guys are interested, if you listen or watch, obviously we'll drop a bunch of links below. But Trent, how do you want people to reach out? How do you want them to connect with you?
Best way is go to moontax.com. When you go to moontax.com, you can book a free consultation with us. You'll fill out a quick little form that just kind of says where you're at. You know what I mean? Like if you filed your taxes, have you used a crypto accounting tax platform? Are you currently using a CPA? How many transactions you have, just to give us some basic information about your situation before we jump on a call. And then you can just we'll right then you can select a time and day that works for you, and I'll show up and we'll have a conversation.
Awesome, man. Hey, I appreciate your time. I appreciate you sharing your wisdom. It didn't disappoint. I think we packed a whole lot in here and a lot of things for people to think about. So I appreciate you, brother.
Yeah, of course. Thanks for having me, Devin. It's always a pleasure.